So this is a 17-year-old company that's just now going public for the first time. They tried going public in 2006.
17 years ago, somebody went with the name GoDaddy.
I know. And thought that domain names would become a billion-dollar business. $1 billion in revenue. That's what they posted last year. They also posted $200 million in losses. So we're seeing an interesting time for this company to go public. Of course, you see its executive chairman stepping down. He's taking a step away from the company. This is the founder, Bob Parsons, who is also somewhat controversial, as are their ads. But
why is he controversial?
Oh, well, he's done things that set PETA off with elephant hunting, and he's also kind of the man behind the controversial, sexy, racy ads that you've seen during the Super Bowl with Danica Patrick. And I mean, I was watching some of them this morning. They're pretty racy. They're pretty racy ads. But on the flip side, of course, these ads have given it some brand recognition. It's given it some significant market share. So this company is saying this is the appropriate time to go public because of that market share and because of that growth.
Could the cynic look at this and say GoDaddy and its backers just wanted to go public because we're living in .com 2.0?
Absolutely, the cynical person could say that.
I mean, why hasn't GoDaddy gone public up until now? It's 17 years old. Has it ever made a profit?
No. Well, no. Never
right?
made an annual profit anyway. And so you're looking at a company that's still losing $200 million. Those racy Super Bowl ads, $154 million spent on advertising and marketing last year. So these companies' expenses are high.
If you want Bar Raffaelli to make out with that guy, you got to spend a lot of money. That's sort of how it works. All right, well, what is the company going to do with all this money?
So first of all, they'll pay back debt, right, to Silver Lake, KKR, Technology Crossover Ventures. Those are the three main sponsors who own a stake in this company. They're also going to do a one-time payment of $25 million to the sponsors, so as kind of a final payment as part of their terms of agreement on the transaction. So right now it's debt, and that one-time payment is also...
That's not really a growth strategy, though. If you're going to sell this deal to the open market, you can't possibly say, well, I'm just going to pay back my debtors. What are they saying they're going to do with the money from a growth standpoint?
So on that standpoint, it's very vague right now. It's general
murky.
Corporate purposes.
Are you kidding me?
Working
Somebody
capital.
shows up, I want to go public. Great, what are you going to do with the money? I'm going to pay back people that I owe money to. I mean, hello.
Exactly. Well, and they say that they may acquire complementary technologies and businesses, but they are very vague in the prospectus about what those businesses are.
Hasn't the business model been weakened somewhat over the past few years by the opening up of domains? It's no longer just about .com, for example, or .net or .org or .edu. There's .tv, there's
.me.
Right, and there's an effort to try and make even more domains.
Certainly, and they mention in the prospectus that they have this open software agreement, so they don't own the patents on how to give out those domain names as well. So it's something that has come under pressure in terms of pricing for them. It's something that they've had to diversify their strategy a bit. One thing that they've embarked on to diversify their revenue stream is to sell email addresses, which they say is a higher margin business. Email addresses associated with these domain names. So if it's erikschatzker.com, your email address may be me at erikschatzker.com or something like that, and that's expensive.